I thought it was interesting as we got ready for this seminar to talk about forward-looking investing, and obviously everybody's evaluating their investments when the year starts, and I came across two articles, distinctly different, discussing a couple of different money managers. And article number one I summarized, and they described this manager as being washed up. The author said, the market has evolved, this gentleman has not. He clearly no longer understands the market. This man missed the opportunity of a lifetime, and due to his stubbornness, his shareholders have suffered. Hate to be that money manager. I know some of you might think that about me. But let's look at the other manager and compare and contrast these two. The author, this was also in Forbes magazine, same place the first one was in. They described the manager as saying his methods are timeless. He has a rare understanding of what drives the economy and businesses. His patience and discipline are examples all investors should follow. And he is one of the best investors in our lifetime. So these are two well-known money managers. If I told you the name, you guys would know who it is. Any guesses on who manager number one was? Nobody? It was written in 1999. Very well-known investor named Warren Buffett. Article number two. You guys can think of a manager like that? I'll give you a hint. Yeah, Warren Buffett. I heard it out there in the audience. So how could somebody who's considered washed up and too stubborn and missed the opportunity of a lifetime, 15 years later be described as one of the best investors in our lifetime? What changed? Did Warren Buffett change? No. In fact, if you go to my office, you will find this really thick binder of every single investor letter he's written since the 1970s. Why? Because I think that could be a textbook on how you should invest. He's methodical. He's extremely disciplined. And yes, he is stubborn. Many of you might not know this, but he's a former insurance actuary. They're almost like engineers. It's the numbers. That's all they care about, is the numbers. The reason Berkshire Hathaway, his company, owns so many insurance companies is he understands it. He understands, okay, if you do the numbers right, all of a sudden you have this free float, then we can invest it in high risk reward things. Well, guess what happened in the 90s? Mr. Buffett said, I do not understand how these technology companies are making any money or how it'll pay off for shareholders based on the valuations they're at today. Everybody was calling him washed up. He stuck to his methods. He ended up being proven right. And now here we are in 2014 and again 2015. His investor letter just came out. It's great reading. I mean, oh my gosh. If you have to read one thing about investing from the mainstream media, download his shareholder letter each year and then ignore everything else the rest of the year. Because he shows you the advantages of a methodical, disciplined approach. But guess what? At certain times of the market cycle, a methodical, disciplined approach is going to look like it's not very attractive. If Warren Buffett could be called washed up and described as missing the opportunity of a lifetime, it's very humbling. A lot of people thought that back then. But then the market did what he said it was going to do. It corrected the valuations. And guess who was standing there ready to buy all these discounted stocks? Warren Buffett, because he had cash available.